Right. We have been discussing how to prepare financial statement based on trial balance. Things all proprietorships, partnerships, as well as company. Those are the organizations we have to discuss on the level. All the business organization for provide information to the interest party, financial statements should be prepared. Therefore, when preparing financial statement, think about process. First one, changes in resource of the business organization should be recognized as a transaction and events. Second one, information should be collected by using source documents. Third one, information should be recorded in the payment books. Fourth one, information should be recorded in the ledger accounts. By closing ledger account, trial balance should be prepared. Then based on trial balance, if trial balance is not equal, error correction should be done. Error correction. Then adjustment. After that, you have to know how to prepare financial statement. Think as adjustment we have discussed inventory adjustment, bad debts and doubtful debts adjustment, EPF and ETF adjustment, and accrual prepaid expense adjustment, goods sent on sales or return based adjustment, disposal adjustment, depreciation adjustment, everything adjustment available all the business organization. It may be sole proprietorship, it may be partnership, it may be company. Therefore, we are going to discuss how to prepare financial statement based on trial balance together with adjustment. We have discussed all the adjustment. Now think how to prepare financial statement based on trial balance. Right, see the question number 1. It has given trial balance 31st March 2025, Diane Enterprise, and trial balance available assets, liability, income, expense, as well as equity. Right. And given in this example, there are 12 adjustment. 12 adjustment. First one, goods sent on sales or return basis. Second one, damage stock adjustment. Third one, EPF and ETF adjustment. Fourth one, sales invoice completely omitted. Sales invoice complete omitted. Part of error correction. And 5, close in stock adjustment. Close in stock. 6, stock donation. 7th one, motor vehicle disposal. 8, prepaid advertisement. 9th one, accrual telephone. 10, it has given depreciation rate, built-in as well as motor vehicle, state line basis. And 11, bad debts and doubtful debts adjustment, as well as last one, stock drawings. Stock drawings. In this example, it has given there are 12 adjustments. They ask income statement for the year end 31st March 25 and statement of financial position as at 31st March 25. Income statement and statement of financial position. Think income statement should be recorded income and expense. Assets, liability, and equity should be recorded financial position. When preparing financial statement based on trial balance, income and expense should be recorded income statement. Assets, liability, and equity should be recorded financial position. Right. It has given big values, therefore can be disclosed values in million. I'm going to discuss this example values in million. Right. First one, draw the format like this. This is the way you have to prepare format. Income statement. Think sales minus sales return. Then cost of sales calculation. This is the way you have to prepare format. Cost of sales, it composition, opening stock, plus purchase, plus carriage inwards, plus loading, unloading cost, plus import duty, minus purchase return. Return outwards equal purchase return. Then answer is goods available for sales. goods available for sales, then damaged inventory drawings, damaged stock, stock donation, and closing stock. If those are available in the adjustment, should be deduct from the cost of sales calculation. Here should be deduct if those are available only adjustment. Damaged stock, donation, drawings, and closing stock cost value should be deduct based on matching concepts. If those are given in the adjustment, not trial balance. Then gross profit can be calculated plus other income space here. Then expense should be categorized: sales and distribution expense, administration expense, other expense, and finance expense. Expense should be categorized like this. Then think how to prepare a statement of financial position also. Statement of financial position should be recorded assets, liability, and equity. Right. Think assets should be recognized separately, current and non-current, based on going concern concepts. Based on going concern concept, assets and liability should be recognized as a current and non-current, Then think equity also, opening balance plus profit minus drawings, then non-current liability as well as current liability. This is the way you have to prepare format before answer the question. Right, first one, draw the format like this. Right, then from the beginning, adjustment should be done. Based on trial balance, when preparing financial statement, adjustment should be done from the beginning. But think adjustment also cannot be done from the beginning if it has given interrelated adjustment. If it has given interrelated adjustment, should be done from the beginning. Adjustment should be completed before complete trial balance. You can trial balance එක complete කරන්න කලින් adjustment එක ඉවර කරගන්න ඕන. Adjustment also cannot be done from the beginning. From the beginning, if it has given any organization, it may be sole proprietorship, it may be partnership, it may be company. Based on trial balance, when preparing financial statement, from the beginning, if it has given sales invoice complete omitters, should be done. In this example, this adjustment should be done from the beginning. Sales invoice complete omitters. Think sales invoice mean credit sales. And at the same time, if it has given goods sent on sales or return basis, additional second one should be done after that. Think goods sent on sales or return basis. And at the same time, inventory adjustment. If it has given closing stock, also should be done at the same time. And given closing stock adjustment also, inventory cost value is given as a net realizable value. Additional 5 should be done together with goods sent on sales or return based adjustment. As well as bad debts and doubtfuls also at the same time. Those are called interrelated adjustment. Bad debts and doubtful debts adjustment. Right, those adjustments should be done from the beginning. If it is given sales invoice complete omitters, should be done from the beginning. And at the same time, if it has given goods sent on sales certain basis, goods sent on sales certain basis, at the same time inventory adjustment and bad debts and doubtful debts, those adjustments should be done from the beginning. Think sales invoice complete omitters, debtors account debit, sales account credit. And think goods sent on sales or return basis, this one, first adjustment, it has given cost value, selling price also given, it has been recorded as a credit sales. It has been recorded as a credit sales. But given at the end of the accounting periods, 40% of goods were remain. 40% remain. Think goods sent on sales or return basis. And given inventory also additional 5, cost of inventory is given and net realizable value of inventory also given. Think how to adjust inventory, 3 marks. And additional 11, bad debts and doubtful debts. Also, there are 4 marks available. Think bad debts given adjustment also. Then doubtful debts, it has given percentage 10%. You have to know how to recognize under provision and over provision. Right. Prepare the working for that. If it is given interrelated adjustment should be done from the beginning. Additional fourth one, then first one, at the same time 5 and 11. Sales invoice complete omitters. We are going to discuss how to prepare financial statement based on trial balance. That first one, prepare the workings. Sales invoice complete omitters. At the same time, goods sent on sales certain basis and inventory adjustment as well as bad debts and doubtful debts. Right from the beginning should be done. Additional information, fourth one, additional fourth one, then first one, at the same time 5 and bad debts and doubtful debts additional 11. Interrelated adjustment, if it is given, should be done from the beginning. Right. Then given sales invoice complete omitters. It is prepared for data and sales. Therefore, under work and prepare debtors accounts as well as sales accounts. At the same time, bad debts and doubtful debts. Prepare bad debts account also. And doubtful debts expense accounts as well as allowances for doubtful debts. Think interrelated adjustment, if it is given, should be done from the beginning. And given balances also. This one data, sales accounts, bad debts accounts. Think how to prepare workings. Then doubtful debts expense accounts, doubtful debts expense, and allowances for doubtful debts. Allowances for doubtful debts. Record values in million. Record values in million to maintain understandability. Right. Prepare record given balances. If it has given balances in the trial balance, will be record from the beginning. Right now, I'm going to discuss additional fourth one from the beginning. Think interrelated adjustment. Sales invoice complete omitters. Goods sent on sales or return basis. At the same time, inventory adjustment, bad debts and doubtful debts. Data account balance is given trial balance. Record that value as a balance brought forwards. Data 6,986. Values in million as a balance brought forwards. If it has considered tick mark in the trial balance, sales account also given balance, income credit side 44,952 as a balance brought forwards. And bad debts account also given balance, bad debts expense, it is equal impairment loss on trade receivable, debit side 200. And allowances for doubtful debts. Allowances for doubtful debts account balance it is given 550 asset accounts, but if 8% decrease, therefore we can see credit balance. Right, from the beginning, sales invoice complete omitters. Prepare the ledger accounts and record given balance as a BBF, as a balance brought forwards. From the beginning, interrelated adjustment should be done. Think additional fourth one, then additional 1, additional 5, as well as additional 11. Record values in million to maintain understandability. I think additional fourth one, 160 million worth of sales invoice complete omitters. Sales invoice mean credit sales, double entry, debtors account debit, sales account credit. Should be done from the beginning any organization. It may be partnership and company also. Sales invoice mean credit sales, double entry, debtors account debit, sales account credit. 160, they have debtors account debit as a sales and sales account credit as a debtor. Thing adjustment, you have to apply double entry, debtors account debit, sales account credit. Then very important additional first one, thing goods sent on sales or return basis. It is effect for debtor as well as inventory and sales. Read carefully additional first one, goods sent on sales or return basis. Goods sent on sales or return basis. Cost value is given 160. Additional first one. Additional one, think about workings. Cost value is given 160, but selling price is given 280. It has been recorded as a credit sales. It has been recorded as a credit sales, but end of the accounting periods, 40% of goods were remain. It means 40% not sales. Additional first one relevant for goods sent on sales or return basis. It has given cost value and selling price is given. Already it has been recorded as a credit sales. It means debtors account debit, sales account credited already, but end of the accounting periods, 40% not sales. Think first parts, selling price is given 280. Based on that value, 40% not sales, but it has recorded already as a credit sales. It has recorded already as a credit sales, but 40% not sales. Therefore, first one, based on selling price, 40% should be removed from data and sales. This is the first part. Recorded already as a credit sales, but end of the accounting period, 40% remain. It means 40% not sales, but total value recorded included data and sales, but 40% should be removed from data and sales. Therefore, debtors account credit 112 as a sales and sales account debit 112 as a debtor. Thing recorded already, debtors account debit, sales account credited. It is include data and sales, but 40% not sales. Therefore, based on selling price, 40% should be removed from data and sales. As well as if it has not sales, its cost value should be considered as our inventory. Think it is given goods sent on sales or return basis, cost value equal 160. Based on that value, not sales amount should be considered as a closing stock. Therefore, 160 into 40%, 160 into 40%, not sales amounts should be considered as a closing stock. At the same time, inventory adjustment should be done. Think inventory adjustment given additional 5. Goods sent to the other business on sales or return basis, recorded already as a credit sales, but end of the accounting period, 40% remain. It means 40% not sales. Therefore, based on selling price, 40% should be removed from debtor and sales. As well as based on cost value, not sales amount should be considered as a closing stock. Think additional 5, it is given inventory. At the same time, inventory adjustment should be done. Divide by 2 parts. Think about cost value and net realizable value. Additional 5, cost of inventory is given 315. Net realizable value of inventory is given 310. Those are the inventory available at the store. Think goods sent to the other business on sales or return basis. If those are not sales, its cost value should be considered as our inventory. Therefore, based on cost value, 40% should be added both cost and net realizable value. Therefore, this is the value should be considered as a closing stock. Think cost value total amount equal 379. Net realizable value total value equal 374. If NRV lower than the cost value, based on prudence concepts, difference value should be considered as a stock written off also. Think goods sent on sales or return based adjustment. First one, it has recorded as a credit sales, but 40% not sales. Based on selling price, 40% should be removed from data and sales. Think first part. And based on cost value, 40% should be considered as a closing stock. That value should be added both cost and NRV. Additional 5 it has given inventory adjustment. It has given inventory available at the store. Cost and NRV is given. But thing goods sent to the other business on sales or return basis. If those are not sold, its cost value also should be considered as our inventory. At the same time, bad debts and doubtful debts also should be done. Thing additional 11. It has given bad debts and doubtful debts. Recognize under provision, over provision also. Recognize under provision and over provision also. Additional 11. Think 34 million should be written off from debtor as an impairment loss on trade receivable, and given balance of allowances for expected losses on trade receivable as at 31st March 25 should be 10% of the remaining balance of trade receivable. Think bad debts 34 million. Effect for debtor decrease, debtors account credit as a bad debts, and bad debts account debit 34 as a debtor. Think debtors account credit, bad debts account debits. Then doubtful debts. It has given allowances for doubtful debts. Closing balance should be equal 10% of the remaining balance of trade receivable. The remaining balance of trade receivable should be calculated. Debtor balance should be carried down. Debit side increase. The debit side total money equal 7,146. Take the same value credit side and difference value as a balance carry down. Difference value as a balance carry down. They have think data closing balance equal 7,000. Think values in million. They have this is a data closing balance. Then doubtful debts. It has given balance of allowances for expected losses. Balance of allowances for expected losses as at 31st March 25 should be 10% of the remaining balance of trade receivable. Think remaining balance of trade receivable equal 7,000. Based on that value 10%. Therefore 7,000 into 10% equal closing balance of allowances for doubtful debts. Value equal 700. Think doubtful debts expense account debit, allowances for doubtful debts account credit, normal double entry. But now here opening balance available. You have to record under provision and over provision. Think opening balance is given 550, but closing balance equal 700. Difference value should be recorded now. If there is a balance, difference value under provision, over provision should be recognized. Think closing balance should be equal 10% of the remaining balance of trade receivable. Right? Think how to record it. First one, recognize separate like this. Therefore, balance carry down. Based on this value, 10% should be recorded as a closing balance here. It has given balance of allowances for expected losses as at 31st March 25 should be 10% of the remaining balance of trade receivable. Therefore, here as a balance carry down, based on this value 10% equals 700. That value here balance carry down. It should be record credit side as a balance brought forwards. Closing balance. Then difference value should be transferred to the doubtful debts accounts. Difference value. Now think increase sides, debit side increase. ඔන්න මතන opening balance එකක් තිබුණොත් calculate කරන ගාන closing balance එකද record කරන්න ඕන. ඊට පස්සේ මේකේ difference එක තමයි මේකට මාරු කරන්නේ. Debit side increase 700. Take the same value credit side. Therefore difference value equal 150. Therefore this one credit and doubtful debts account debit. It is called under provision. If opening balance is lower, difference value should be considered as under provision. Therefore, doubtful debts expense account debit as allowances for doubtful debts. Allowances for doubtful debts credit as a doubtful debts expense. Think doubtful debts. First one, sales invoice complete omitted. Second one, goods sent on sales or return basis. At the same time, inventory adjustment. Then think bad debts and doubtful debts. Bad debts, total value equal 234 should be recorded under distribution expense. Bad debts and doubtful debts should be recorded sales and distribution. Bad debts and doubtful debts. And debtor closing balance minus allowances for doubtful debts closing balance under current assets. Debtor minus allowances for doubtful debts. And the sales account also should be closed. Income statement as a sales should be recorded correct value. Credit side increase. They will take credit side total amounts 45,112. Take the same value debit side. They have a difference value as income statement. Think difference value equal 45,000. This is value should be recorded income statement as a sales. And think inventory also, cost value should be recorded under cost of sales calculation. Lower value should be recorded under current assets. Low value. NRV lower than the cost value. Therefore, difference value is stock written off. Right now, record on the financial statement. Think how to record closing stock. Cost value is given as well as net realizable value. Right, record on the financial statement. Record those information income statement and statement of financial position. Invent 3 marks. Think bad debts and doubtful debts under sales and distribution expense. Sales value should be recorded income statement. And debtor minus allowances for doubtful debts should be recorded under current assets. Right, record those information. Income statement and statement of financial position. That first one sales should be recorded from the beginning, income statement. Sales should be recorded income statement. Sales correct value equal sales 45,000 should be recorded income statement. Here 45,000. And the inventory closing stock should be recorded under cost of sales calculation cost value. Cost of inventory equal 379. Cost value equal 379. Second column. And stock written off other expense. Stock written off other expense. Stock written off. Expense should be recorded 5 million. And think bad debts and doubtful debts also available. Bad debts and doubtful debts under sales and distribution. Bad debts as well as doubtful debts. Think bad debts account total value equal 234. But doubtful debts equal 150. Expense under sales and distribution. And statement of financial position should be recorded inventory. Lower value of cost and NRE from the beginning. financial position, second column, 374. Lower value of question in RV. And think data balance also. Data minus allowances for doubtful debts. Minus allowances for doubtful debts. Think allowances for doubtful debts and data. Data account closing balance equal 7,000. From that value deduct closing balance of allowances for doubtful debts. Think closing balance of allowances for doubtful debts equal 700. Then 7,000 minus 700, 6,300 should be record second column. Think how to disclose on the financial statement. How to disclose on the financial statement. That data minus allowances for doubtful debts. Then inventory lower value of first and NRV. Think how to disclose on the financial position. Right, interrelated adjustment should be done from the beginning. First one sales invoice completometers. Second one goods sent on sales or return basis. At the same time inventory adjustment as well as bad debts and doubtful debts. All other adjustment can be done from the beginning. Then second adjustment alone for damage stock. Think second one 250 worth of stock was damaged due to flood. But given insurance company agreed to pay 80% as a compensation. 3 marks. Damage stock value equal 250. But insurance company agreed to pay as a compensation 80%. Therefore, compensation not received yet. Receivable. Therefore, that value should be recorded on the current assets. And balance part cannot be recovered. It should be considered as expense. The thing how to adjust damage stock. Insurance receivable available 3 marks. First one, calculate insurance receivable. Insurance receivable 80%. Insurance receivable 80%. Right. Therefore, this is the way you have to calculate damage stock. Additional second one. Think workings. Damage stock value equal to 250 divided by 2 parts. Insurance receivable as well as balance part damage stock expense. Insurance receivable equal 80%. Insurance receivable balance part should be considered as a damage stock expense. Balance part damage stock expense. 80% insurance company agreed to pay as a compensation. Balance 20% cannot be recovered. Think total damage stock equal to 250. Based on that value, 80%. Insurance receivable under current assets. Balance 20% cannot be recovered. Balance 20% cannot be recovered. It became expense. Therefore, damage stock expense equal 50 should be recorded under other expense. And this one insurance company agreed to pay as a compensation but not received yet. This value should be recorded under current assets. But total value should be recorded under cost of sales calculation based on matching concepts. This one other expense. Under other expense. And this value should be recorded under current assets. 3 marks. Think damage stock based on matching concepts. Cost value should be deducted under cost of sales calculation. Cost value. They think how to adjust second one. Second adjustment. Damage stock 3 marks. Cost value should be recorded under cost of sales calculation. 250. Insurance receivable equal 200 under current assets. Balance 20% cannot be recovered. It will be recorded under other expense. Damage stock adjustment under cost of sales calculation as inventory damage. Second column within brackets. Based on matching concepts, cost value 250 as well as and other expense as damage stock expense should be considered only 50 as damage stock should be recorded 50 first column, expense should be recorded first column as well as insurance receivable and current assets. Insurance receivable for damage stock. Insurance receivable for damage stock. Insurance receivable for damage stock 200 should be recorded second column. Assets. Insurance receivable. Think 3 marks. Damage stock based on matching concept and cost of sales calculation. Damage stock as well as insurance receivable not received in cash yet should be recorded under current assets. Balance part should be recorded under other expense as a damage stock expense. Right thing, other adjustments should be done. Then think additional 6 also. Additional 6 it has given damage donation. Stock donation. Stock donation, double entry, donation account debit, purchase account credit. Stock donation account debit, purchase account credit. Therefore, donation should be recorded under other expense as well as stock donation should be recorded under cost of sales calculation also. 265. But sometime it is given donation under trial balance also. If it is given trial balance also, total value should be recorded under the expense. But in this example, not given trial balance, it is given only adjustment. Therefore, this value should be recorded under other expense as well as same value should be recorded under cost of sales calculation also. 265. Stock donation value equal 265 and cost of sales calculation as stock donation here within brackets 265 and other expense also, other expense as donation same value as a donation same value 265. But think if it has given donation trial balance also, total value should be recorded under other expense. Total value